let's start with what we've seen in stocks, because the Asia session picking up on some of the positivity that we certainly saw on Wall Street yesterday, trying to turn around last week's low participant performance, perhaps. But we saw stocks then performing much more positively yesterday than we had done so far year to date. You continue to think that there is something more to come from a positive stocks position, but I'm interested to see that some in your team on the Markets Live team actually take a different view around stocks. So what are you seeing from here?
Yeah, I mean, I think, first of all, we've done our Markets Live 2024 S&P 500 Outlook today, and Tatiana Dari's written it, and the majority of the team is bullish. However, there are a few people who are very, very concerned by the usual worries that there's too much economic complacency out there, valuations are too stretched, and that eventually the long and variable lags will hit to constrain stock prices and the economy together, and therefore see some nasty downside. And that's, I think Tatiana's presented an excellent outlook of both sides of the argument out there. The way I see it is that right now, never mind the whole year view, which is what that was about, in the short term, we are still in this Goldilocks environment where we are not yet pricing too hot growth or a recession, and yet we're pricing that the Fed will cut rates relatively aggressively. Given there's not an economic slowdown, it will be almost unprecedented, such a rate-cutting cycle as is priced by the market. And until that changes, we're in a Goldilocks scenario for risk assets and particularly for US stocks. So I think US stocks will continue to gain in the next few weeks until that narrative gets derailed by either being too hot or too cold. And the reason I think it lasts for another few weeks is that we need a whole sequence of data prints to knock us out of the current Goldilocks pricing.
OK, and one of the things that we're watching very closely when it comes to thinking about where the inflation trajectory goes from here is the oil price. I know the team were talking about this yesterday with oil prices under pressure in yesterday's session. They're broadly holding on to that drop. 76.28 is where we trade on Brent right now. We've seen quite a lot of bearish bets on oil coming into the new year, Mark. Where do you think this heads?
I mean, again, the team's overall outlook is that we probably get similar to last year. We get some big moves up and down, but we end around these levels. And that's because ultimately the biggest factors in the market are providing a little bit of a ceiling and a floor. Now, not close to the market, but if prices drop too much, well, then we will see more aggressive production cuts. And if prices rise too much, well, then there's still ample supply to come on in the margin. So there's those supply factors, that US shale as well, that ultimately provide a not close to market ceiling and floor in the market. So expect a lot of volatility for the year ahead in oil, but oil prices to probably finish roughly around this $70, $75 a barrel mark, which is kind of very similar to the dynamic that we've seen, in fact, the last couple of years. However, the one other commodity that we do have a slightly unconsensus view on is we're slightly bearish gold, despite the fact almost the whole world is unanimously bullish it because they are bearish the dollar.